All right, good morning, traders. Today is June 11th, 2026. My name Coach Kerrigan, lead instructor here at the BYOB Trading Room, day trading service for the Hit and Run Candlesticks family. Thank you, everybody out there, podcast land, digital land, cyberland, all the social media. Thank you so much for following the content, liking the content, leaving kind words on the content, subscribing to the content. Special shout out, Bob Jordan, John Jordan, Kathy, Sarah Roasted, Ed Carter, Rick Sadler, thank you for sharing the content, helping get the good word out there to the World Wide Web, help educate the masses. Thank you so much. All right, let's move this off to the side. Let's take a peek at the market yesterday. Let's take a look at a little summary for yesterday. All right, so my SPY pivot remains the same. It's 730.45. Above it, I'm a bull. Below it, I'm a bear. Yesterday, for daily candles, FNGU, SPY, QQQ, IWM all made inside daily candles. That's lower highs and higher lows. Closing under bearish straps and under their flat 17 EMAs. Diamond Dow made a lower high, lower low, closed under a bearish cross and under a flat 17. SPY closed with a 10-minute downtrend and a 2-hour downtrend. Gold and silver, lower highs, lower lows, closed under bearish traps underneath falling 17 EMAs. USO downtrend made a higher low and a higher high, closing inside a bearish trap and under the fading 17 EMA. UNG higher low, higher high, closed inside a bearish trap, but over the flat 17. US dollar index still in a daily uptrend, still has not broke out yet. Closed in near 100.05 area. SPY max pain for today, 731 with a put to call ratio of about one put to each call that expires today at 4:15. Index options expire at 4:15. Security options expire at 4. This is your first time seeing this. These are all little watch lists. These are all in daily uptrends over the 17 EMA. These are all in daily downtrends under the 17 EMA. Let's take a look at the markets. Let's take a look at yesterday. Coming into the close. SPY 10-minute chart. Got the sticks and the 3 plotting underneath a falling 8 EMA right here. Okay, so we got daylight between the 3 and the 8. We got a 2-hour, we got a 10-minute downtrend coming into the close. Let's take a look at the 2-hour. Okay, let's move this out of the way. We got the sticks and the 3 plotting underneath a falling 8. Got a 2-hour, got daylight between the 3 and the 8. Got a 2-hour downtrend coming into the close, daily candle. Inside day, higher low, lower high, closed under bearish strap, closed under flat 17, closed in the top of quadrant 3. That's still bullish, in the top of quadrant 3. It's in the upper third, but it's still in an uptrend. It's just not moving up. All right, it's going to be a long haul to take out the first pivot, because they didn't put any consolidation anywhere in here. So it's a long haul all the way back down to here to take this low out in order to ascertain a downtrend. Okay, you're more likely to put in a higher low and then a lower high and then take out that downtrend. More likely than to come all the way back here. Straight all the way back here. But we'll see what happens. It could happen, but I'm not going to take it off the table, but I think it's highly unlikely. So there's SPY on the daily chart. We're still in an uptrend. We're just not moving up. On the weekly chart, we have, again, still in an uptrend. All right. And still bullish in the upper third up there, monthly chart. Still bullish, still in an uptrend for SPY. Let's take a look at QQQ. Start on the 10. We'll work our way up. Okay, got the sticks and the 3 plotting underneath a falling 8. Okay, so we have ourselves a 10-minute downtrend on QQQ, 2-hour chart. Sticks in the 3, plotting underneath a falling 8. We've got daylight between 3 and the 8. We've got a 2-hour downtrend coming into the QQQ. On the daily candle, just like SPY, we have a lower high and a higher low. That's an inside day. We're closed underneath a bearish trap. We closed underneath a flat 17. We closed in the upper third at the top of quadrant 3. So we're still bullish. All right, still bullish up here. And still in an uptrend. We're just not moving up. Okay, so there's QQQ on the daily chart. All right, weekly, still bullish and in an uptrend. Monthly, still bullish and in an uptrend. Excuse me. All right, let's take a look at IWM. And we'll start with the daily chart. IWM is an inside day, okay, compared to the day before. Lower high, higher low, closed under a bearish trap under the flat 17. Down here at the bottom of quadrant 4, that's bullish. Still haven't made a lower low, so we're still in an uptrend. We're just in an uptrend, but we're not moving up. We're moving over to the right or kind of melting off a little bit. Still bullish, still in an uptrend for IWM. Let's take a look at Diamond Dow. Diamond Dow, lower high, lower low, closed under a bearish cross, closed underneath the flat 17. Top of quadrant 3, still in the upper third, still bullish, has not made a lower low, so we're still in an uptrend. Another one of those uptrends is just not moving up. Still bullish, all right, because it's at the top of it's in the upper third, and just not moving up, and still in an uptrend for Diamond Dow. Let's take a look at Stinker. All right, Stinker inside day, lower high, higher low, closed under a bearish trap, closed underneath a falling or fading 17 EMA, closed top of quadrant 2, all right? Didn't think I'd be saying quadrant 2 this soon, all right, for FNGU. Closed at the top of quadrant 2, closed just under the midpoint, practically right on the midpoint there. We are not in the upper third. We are not in the lower third, so we're neutral. And we're in a downtrend because we have a low that happens to have made its way through the 17. And we have made lower lows, so we are neutral and in a downtrend for FNGU. Let's take a look at precious metals, silver and gold. Silver and gold, both lower highs, lower lows, closing underneath bearish traps. Silver, top of quadrant 2, underneath all-time high anchored VWAP. All right, so you can see lows here. We made lower lows. So this is neutral and in a downtrend for silver. Let's take a look at gold. Gold, lower high, lower low, closed under a bearish trap underneath falling 17 EMA. This is neutral. We're not in the upper third, not in the lower third. We got a low here. We made lower lows. So we are neutral and in a downtrend for gold. Let's take a look at USO. USO is a higher low and a higher high. We closed inside a bearish trap under fading 17 EMA. We're at the bottom of quadrant 4, so we're still bullish. We have not made higher highs yet, so we're in that dysfunctional uptrend, dysfunctional downtrend in that since making the lower low right here, we've done nothing but move up or over to the right. Okay, so USO, still bullish, dysfunctional downtrend for USO. UNG, higher low, higher high, closed inside a bearish trap over the rising 17 EMA. Put the quad lines on this. Don't know where my quad lines went for this one. We can take care of that. Middle of quadrant 1, okay, so it's definitely the lower third. So this is bearish, but making higher lows and higher highs, so still in an uptrend. So bearish but in an uptrend on UNG daily chart. All right, let's take a look at internals. Start with T2101. Yesterday, a little bit of increase in market breadth or participation. That's a bullish sign right there. That's a bullish clue. T2122 spent the majority of the day above the 50-yard line, showing bullish control there. Another bullish clue there. Look, we even creeped into the overbought zone at one point yesterday morning. Okay, so a little bit of bullish activity right there. That's T2122. T2123. We've got a bullish gap up that got filled by the bears at the end of the day. That's spent the majority of the day over the flat 200. That's where you want to be if you're a bull. Another bullish clue there. Wound up making, now this is the high from the previous day. Notice it clears all of this consolidation. That'd be the day before yesterday. And this is the high from yesterday. And it even clears that high. All right. That's another bullish clue right there on T2123 15-minute chart. Okay, so if we pan way out and we put the quad lines on here, you're going to see us up in quadrant 4, middle of quadrant 4, bottom of quadrant 4. So that's still bullish, all right? And we haven't made a lower low. Notice we made a high, we made a higher high, and in an uptrend. Dysfunctional uptrend, it's just been moving lower instead of higher. All right, so there's T2123. All right, that's bullish and in an uptrend for T2123. Okay, 3-bar chart. We're up over the rising 200 SMA. That's bullish. Up there in quadrant 4. We haven't made any lower lows. This would be the low to take out right here. Okay, on that day, which was May 20th. Okay, so since then, we're still in our uptrend. Since making the all-time high, we've done nothing but fade lower or over to the right. But we're still holding up here in quadrant 4, so that's bullish. Let's take this off. We don't need 2 of them. Okay, so still bullish, still in an uptrend, still over that rising or flat 200 SMA. That's where you want to be if you're a bull. Another bullish clue there on the 3-bar chart. FNGU. All right, FNGU gap lower, and the bulls could not fill the gap. Okay, so a little bit of a bearish clue on that one. This is, remember, it only takes like a few of these big boys to drag the whole market down. So that's not good. But we got a low here. We made some lower lows. So FNGU under the fading 200 SMA. Okay, so that's now where you want to be if you're a bull. If you're a bear, you're loving this. Okay, on the 15-minute chart, we are still up in quadrant 4. No, I think we're neutral. Let's put the quad lines on there. Okay, from the rally. Okay, you can see we're back here at the midpoint, so we're neutral. All right, and we have a low here, and we made a lower low, so we're in a downtrend on FNGU. Okay, so FNGU still in a downtrend, all right, on the 15-minute chart. On the US dollar index, we have consolidation. Major support is the lower if you're above it. Minor support is the top of the peaks here if you're above it. We had a 2025 daily downtrend for 6 months, which transitioned into a bear flag, and we are up over the 200 SMA right there. Currently, we are in this 10-month bear flag. We've tried 6 times to break into the prior consolidation zone. We have not had any luck at all, any success. We may, now that CPI has come out, we'll see. Price action for US dollar index, we have a high here over the 17. So you can see a peak right here. Well, we made a higher high. So we are currently in a daily uptrend within our 10-month bear flag there for the US dollar index. Personally, I don't want to break into the consolidation zone. I'd rather keep a cheap dollar, all right? But it is what it is. It's a double-edged sword. If you're a consumer, you want a strong dollar, all right? If you are a if you're a corporation, you want a weak dollar, all right? So strong dollar helps alleviate inflation for one. Weak dollar helps sell your goods and services overseas or to your neighboring countries. All right, let's take a look at economic package this morning. We're going to start off with Max Payne. Max Payne for today, 731. Let me refresh it just to make sure. They do change it on me sometimes. 731 and one put for each call that expires today. And that's regarding the SPY options that expire today. Okay, so that's Max Payne. Economic calendar we've got for today. We got PPI coming out at 8:30. That's about 12, 13 minutes from now. Okay, we've got jobless claims at 8:30 as well. We've got natural gas inventories and report at 10:30. And that's it. We haven't heard from our new guy, Mr. Kevin Warsh, yet. So I'm curious when he's going to start making some speeches. We've got consumer sentiment tomorrow, 10 o'clock at Friday on the 12th. All right, so we'll see. It's a light day. Keep an eye on that PPI final demand. We could get a breakout of the morning range. All right, so there's economic calendar. Let's hit the earnings. All right, so last night, what did we have? We had, just go look at it. Oracle reported last night. Obviously, they went down because they were at $600 billion. All right, that's over $500 billion. They're still over $500 billion. Oracle. All right, not a big market mover. They could be, but the problem the difference is it's not a problem. The difference is that they're not part of this tech rally due to they are not AI. I think I'm pretty sure this is a dominant AI tech rally. It's a kind of sector specific, and I think we're having a pullback right now on that tech. So we'll see what happens. So there's Oracle. Looks like they kind of drifted lower last night. So again, could be a big market mover. That's quite a bit of market cap, $500 billion, but just not part of this tech rally that we currently are losing right now. Today we've got Adobe after the close. Again, all of these familiar names. Nothing here that's going to be market moving unless, of course, Lennar prints up horrible numbers and then jobless claims jump increasingly. That would probably cause a little bit of disruption there with the markets, but not a lot. I don't think we're going to get a lot of market movement out of these. There's just not enough market cap. And tomorrow, familiar names, nothing here that's going to move the markets. So that's it. Let's take a look at the market. Okay, let's go look, see what we got this morning. Let's move this up. Okay, so hey, let's talk about yesterday. Okay, what did we trade yesterday? Well, this was the guidance from yesterday. We observed some bearish activity in the pre-market, post-market. Price retraced lower more than 50% of the afternoon bounce. Okay, so the day before we got a beautiful afternoon bounce, went about $12 from the low to the high of the bounce. Okay, so but we lost 50% of it. Okay, overnight. All right, so I was looking for a 5-minute uptrend over 736. I don't think that's right though, but to break out of the range there, to take it up to the 745 call wall and possibly 748.20. If we had a failed breakout, I was looking to take a 5-minute downtrend below 731. Okay, so the real trade, this is kind of confusing over here. I think I have a misprint, but anyways, 5-minute downtrend below 731. That trade worked out beautiful. Let's push this up and let's pull up the SPY. Let's pull up the 10-minute. Let's pull up the 5-minute chart, 10-minute chart. Okay, so you can see right here 731. Let's put that on there. Okay, so 731. So the bottom of this tail, see right here. Okay, once we got below the bottom of that tail, we had a 10-minute downtrend all the way into the close right there. Okay, but you can pretty much see that the top was in. All right, once we hit the call wall up here, or the gap fill, you can see they weren't moving any higher. You can see how many 10-minute candles, 1, 2, 3, 1, 2, 3, and now we start to exit the area. Okay, so you can see that 10-minute downtrend begin to manifest, and you can see it probably gets underneath VWAP. So we had a 10-minute downtrend that kind of manifested. We could have entered it right here. That would have been 733. That would have been the red erases green area right there. That'd be the early entry right at 733. So you had 10-minute downtrend coming into the close actually all afternoon yesterday. Don't know why I said 736, because that just takes us up to gap fill right up here. So, which was not far overhead. I was kind of looking for 748. We'll see what happens. Let's take a look at the pre-market this morning, and let's go over here and push this up. All right, so overnight, look at the post-market, big drift lower. Okay, 4 o'clock, we gap way up here, and we're kind of bull flagging. That's not looking too good right there. Honestly, I'm interested in trading this break out of the range to the downside. If I got some follow through on that candle, definitely interested in trading that to the downside. Right there, right here, right now. That would be MES futures, and that would be SPY shares right there. If I got follow through on that candle. Okay, see the range breakout. You've got the top up here. Here's the top. And then here's the bottom of that range. And you can see we're getting a nice breakout right now. So if I got follow through on this candle, I'd be interested. Now, if this turns into nothing but a big tail, okay, look out above. We could be trading higher, okay? And it very well could turn out to be nothing but a big tail as we rip higher. Remember, we got PPI coming out at 8:30. I don't know why this took off early. That was weird. All right. Usually you kind of wait for the PPI to come out because maybe they want to come down and then jerk it back up. We'll see. We'll see what they want to do. Anyways, they're SPY on the 10-minute. I think we're just better off waiting till 8:30. Excuse me. Did I say 10:30? I meant 8:30. I think we're better off just waiting till 8:30 and see what the market does with that information. All right, so there's buying the 10-minute. We're getting a breakout now. Looks like a possible false breakout. I think it's kind of premature. We're just not there yet. I mean, we still got economic data coming out in about 6 minutes. So we'll see what happens here. But if this turns into nothing more than a big tail, I think we may see with this bull flag that we've got, because you draw in the movement. Remember, we came from the low down here, and we came all the way up here, and we moved over to the right. So in this bull flag, I would be looking for a breakout on the upside to trade on up to, well, all-time high anchored VWAP, which happens to be currently at 742.67. Okay, above that, I would look for this high right here, 746.97, and above that, the resistance at 748.20. Okay, I think that's a ways away, even though the call wall is up there at 750. I don't foresee us getting that high, but who knows? We've got some IPO that's going to open up pretty soon. If not tomorrow, maybe next week. And we're expected to have an increase in activity in the stock market due to the new IPO that's coming out. So we could see a huge rally coming off there. Remember, SPY still in the upper third. If you look at the quad lines on the daily chart, okay, again, quad lines on the daily chart, we're still in the upper third. So we're still bullish. They haven't lost it yet, okay? So Alan's got some news. Let's take a peek at it. Just want to see what he's got. And he doesn't know. He's just saying, he's just taking a stab. European Central Bank. So, according to this, they've got inflation that's coming out of due to the war in the Middle East. This is European Central Bank, and they've decided to raise rates. All right, due to probably higher energy costs, which is the same thing that we're experiencing. Again. The war in the Middle East is not, I'm just going to say it's man-made. It's kind of like you got freshwater lakes and then you got man-made lakes, okay? There's a big difference, okay? This is what's going on in the Middle East is kind of man-made and it can be stopped at any time. But the idea that they're raising rates due to what's going on, I can see due to the energy shortage, they see future inflation. So we'll see what they want. It looks like they want to pin their number to what's going on there. So we've got 3 key interest rate hikes in the future for the European market. All right, that's. I'm not going to say that's going to squash that, but I don't think it's going to fix their inflation. All right, I'm just saying that. Even anything that we do with the rates, all right, I don't know what Kevin Warsh is going to do, but I don't see anything that he does going to fix the inflation. What has to fix the inflation has everything to do with the Middle East. And that's create certainty. We have uncertainty right now. All right, we don't know if the shipping lanes are open. We don't know if we can get oil on demand. All right, so that's the uncertainty. And with the uncertainty becomes the inflation. And I think the European Bank is doing the same thing. They got the tail wagging the dog here. They need to fix what's going on over there and stabilize certainty in their energy market. And I think that goes for everybody around the world. Otherwise, your energy market's just going to wag the dog. In other words, that's the tail wagging the dog right there. So that's just my take, all right, on it. Just my opinion. Other than that, I think once you get certainty in the energy markets, I think your inflation stabilizes. We'll see. All right, so there's SPY. On the daily chart, again, back on the 10-minute, we had a breakout. Let's go back over here and let's push this up. And let's go back over here and let's go to the 10-minute and let's push this up. Okay, so inside day. See, I said if we got follow through on that, I was looking to trade that to the downside. Again, 8:30, we're going to get some news from our PPI, all right, which is producer price inflation. So we'll see what happens with that. So anyways, I'm interested in trading a breakout of the range. Currently, I think this breakout is premature. If we get follow through on the big red candle, all right, I'd be interested in trading this lower to the gap fill and then to the overnight lows. And then my ultimate target is the rally, the origin of the rally, all-time anchored VWAP. Not all-time low, it's just origin of the rally anchored VWAP. And that's currently, I don't know if I have it on there, at about 711, all right, 711. And let me see if I can set that up for us. Okay, origin of the rally right there. Take the anchored VWAP, plunk it in right on that. And that winds up being, 712. 712 is where I think we're ultimately coming. All right, so we'll see what happens. I think they might even get there today based on what we see in the pre-market. Big red candle to the downside. All right, so looks like we're going to get the follow through. Again, I'll be short. My stop is obviously going to be 30 cents over 731.40. So that's going to be 731.70. All right, so that's my stop once that red candle breaks the low of that tail. All right, so that's my pre-market trade to the downside. Again, first target to take profit is gap fill. Second target is going to be the overnight low. Third target is, of course, all the way down there to 712. And we may keep going all the way to minor support. We'll see what happens, okay? It's not like $25 days are new, all right? We just had one a couple days ago. We're having $15 and $12 days movement in days. I mean, look at this. This goes 722 up to 738 and then back down to 722. Okay, so looks like here we got a trade. Trade is on right there for me. All right, we got the PPI come out, so looking for this to come down here, probably lower, and then even lower than that. All right, that's my take on this morning. That's a bull flag, and we're losing the flag. The flag is being shredded as we speak right now. All right, any questions this morning? Okay, I'm trading a breakout of the range. What is a non-man-made war? No, I'm talking about man-made. War is always man-made, okay? But I think the energy crisis that we're experiencing is a product of the man-made war. No, they're all wars are man-made. They can stop at any time. In my eyes, they are. They're all choices that man has made. So they're all man-made. All wars. Now the energy crisis, okay, is manufactured from the war. All right, and they could fix that if they could stabilize it and give them peace. But the only way you're going to give them peace is to allow them to have a nuclear bomb, and that's not a good idea either. So, you know. Thank you, Alan. So Alan shared this with us. And Alan is a great contributor here in the BYOB room. He manages to get us a lot of the numbers. So here we are with jobless claims. They wanted a range of 211 to 227. The actual was a little bit higher. All right, so you can see jobless claims are ticking up the range. We just took out the high side of the range. Not good, but I mean, 2,000 initial jobless claims higher than the initial range is not bad. It's not like we're blowing it out of the water with 30,000, okay? But we did take out the high side of the range, okay? That's on the jobless claims. That's not a good sign. Again, we want people in the USA to have money to spend, all right, because that helps keep the economy going, all right? So having a job usually equates to having some money to spend, or at least a credit card to put it on, all right? That helps the economy. PPI, what do we got here? Month over month, prior revised consensus, 0.04 to 0.09. We came in hot. I mean, what would you think would happen coming in hot? Again, we have an energy shortage, and it's going to cost more to get those. This is producer price inflation. It's going to cost more to get those basic raw materials to manufacturing plants where they can transform these materials into workable parts to put together, all right, to make something that becomes a sellable product. And you can see right there, that's probably part of the energy. Now, if you take the energy out, they don't have an X. Here's the X food and energy. We're right in line. See that? So take out food and energy, and the consensus is 0.03 to 0.05. Oh, it's getting 0.3 to 0.5. And you can see we're 0.4. So there you go. This is energy. I mean, it clearly says it right there. Take out the food and energy, you're in line. With the food and energy in it, we're hot right there. Wholesale prices rose more than 1.1. There you go. Okay, so if you buy lettuce or ground beef to make your hamburgers, okay, that means the lettuce went up in cost by 1.1%, or the ground beef went up in cost, costing you more out of your profits, okay? And what happens when you have less profits? Well, that's less earnings, and well, investors don't like it. They kind of want to like leave that stock and go to the next one. Okay, so there you go. All right, so we could see another down day today, all the way down to, like I said, the origin of the rally anchored VWAP. All right, so we'll see what happens. All right. If there's no other questions, I don't know if you heard my my reply, Stefan. You don't seem to acknowledge whenever I give you a reply, so I don't know. But anyways, all wars are man-made. All right. All right, I'll see you guys in 35, 40 minutes, and we'll open up the markets and trade them live. Thank you, Stefan. Thank you. And top of the morning to you.